Well, on to this story now. Economic data from Statistics South Africa shows that manufacturing production, which is a huge sector in the South African economy, fell by 0.8% year-on-year in March of this year. This has reversed from an upwardly revised 0.7% growth in the prior month. Also, mining production, on the other hand, plunged by 9.3% year-on-year in the same period. After that, downwardly revised 5.8% fall in the previous month. To make sense of this, we are joined by GroupChifipa Mhango, the chief economist at the Don Consultancy Group. Chifipa, this is data that we always get on a monthly and quarterly basis. Really, the largest, when you look at it, the largest negative contributors were made by the motor vehicles, parts and accessories and other transport equipment, including food and beverages, declining by as much as 2.6%. What is it telling you from where you are sitting in terms of the health of the South African economy when you look at those two sectors?
I think if you're looking at from the decline which have transpired in these two major sectors of the economy, it's telling us that we're still moving the turbulent times in terms of progress towards recovery of the South African economy. The mining sector and the manufacturing sector are really key in terms of their contribution to the South African economy from the growth point of view, but also in terms of contribution towards labor absorption, which is what we define on the basis of employment. So it's kind of worrying, looking at the trend, which has been slightly negative, especially in the mining sector. That decline of 9.3% is quite massive, looking at the impact the mining sector has, especially when it comes to the export generation, revenue generation side of the South African economy. So turbulent times that we are actually moving in.
No, it is turbulent times, Chifipa, but precisely on what you were talking about earlier when it comes to what manufacturing and mining production mean for the labor sector in the country. We know where the numbers sit at the highest levels. Unemployment is at a record high when you compare to other emerging markets. What does this mean when it comes to those sectors being able to absorb the workforce when you look at their production actually falling?
I think there is some number of issues that are actually causing this trend to appear in the economy. It's more weak demand environment that we're actually facing, especially in the manufacturing sector. But also, we're now in the new phase of load shedding, which is now occurring on a daily basis. That is also causing its challenges, because we define that in terms of energy supply, but also the energy cost in the South African economy is also derailing the progress towards increasing production in the both manufacturing and the mining sector. But we're also looking at logistical costs, which have caused a major derailing factor for both of these key sectors, especially when you're looking at the reliability of the railway industry in terms of railway system to supply raw material from the mining sector, but also to take the minerals from the mining sector point of view into the ports. That has also caused some major delaying factors in both of these key segments. So those are some of the challenges which are more or less like it's a cocktail of factors which are happening in both sectors of the economy.
A cocktail of challenges that are actually giving a lot of woes to the South African economy, as you say. But when you look at the data, there has been some positives when you look at the contributions that have been made by other units, by other sectors, when you look at manufacturing, particularly when you look at furniture manufacturing and machinery manufacturing. Those actually posted some positives. What does it mean for those who are in those sectors? And particularly going forward in terms of the outlook?
The electrical machinery, you are right. I mean, the growth was actually positive by almost 12.1%. And also the furniture and other manufacturing division was actually also up by 7.7%. What is also linking this data, if you recall, just last week, there was a release of manufacturing capacity utilization data. And these two segments, divisions of the manufacturing sector, actually also were trading above 80% in terms of industrial capacity utilization. So it tells you that in these two key segments, divisions, there is actually improved trading conditions from the sales point of view, but also improved conditions in terms of availability of the raw materials in this segment of the economy. So that's where you see improvement in this key segment. But also these are the highly consumer-driven segment of the economy. So it tells you also that from the consumer point, there is also a little bit of improvement in terms of consumption patterns that are happening in these key segments of the manufacturing sector. So quite indeed positive in terms of production growth.
Chifipa, we've seen the mining sector being the one that has been propping up the South African economy of late. It has been doing well in terms of what government gets in terms of royalties and taxes. We saw the 40 billion rand last year being used to actually pay the 350 rand grant. When it comes to this 9.3% decline in production in March, what were the reasons that were given for that decline?
The key reasons is more or less like what happened, what transpired in the gold sector, the iron ore segment, manganese ore segment, as well as the platinum group metals. All these segments within there actually declined. In fact, the largest one was actually in the gold sector, about 25.6% decline. So that's where the production, the number is actually coming in at 9.3% in terms of decline because of these key areas within the mining sector actually declining. But also, one of the things that actually is coming out very clear, I mean, we just had the mining industry. If you look at the top there, it's around the challenges that actually the sector is actually facing. I mentioned earlier on around the logistical costs. I also mentioned earlier on around the electricity availability as well as cost. But I think the labor uncertainty in that environment is actually quite strong. You saw what transpired there on the Labor Day. The key message that is actually coming out across there from the labor aspect point of view. So those are some of the challenges that this sector is actually facing. But also there's a more strong element around environmental compliance, which is actually coming in there. So that is also in a way becoming a little bit of a hot potato in the mining sector in terms of the capability of the mining companies actually to meet all the environmental regulations. So that is also putting a strain, especially when it comes to the cost aspects, which gets associated with the environmental compliance. But I think the other issue which also is actually hitting on that mining sector is the illegal mining. I think illegal mining is taking some slight share of production into the actual formal economy in terms of the mining production trends. So in essence, I think that's also another cocktail of events that are actually not having a good taste on the mining sector.
Chifipa Mhango is the chief economist at the Don Consultancy Group, and he's telling us there about what the manufacturing and mining production decline in March actually means for you and I and businesses in South Africa.